What's up, guys? Welcome back to Retail Weekly. I'm Ronnie V. This is Nick or Knots. And this week's episode of Retail Weekly, we're going to be talking about the markets. The markets absolutely threw up yesterday and today. We were down a total of 2 to 2.5% across SPY and QQQ. Some people were calling for this big pullback. Not to toot my own horn, but we were talking about it in our communities. It's not to sit here and say, I'm right, you're wrong. It's more so just to say when we're at all-time highs, we need to be careful, guys. We need to be careful. We need to be taking gains, and we need to make sure that we don't get caught off sides. A lot of us got caught off sides in April with the tariffs.
Yeah.
That happens. But this time around, it was you could see it coming a little bit more. But yeah, in this episode, we're going to talk a little bit about UNH, which isn't really a retail stock. Maybe it is. Maybe it's becoming a little bit of a retail stock, right, Knots?
Yep.
I mean, it's really getting a lot of talk. It's getting a lot of hate as well. We're going to talk about Oscar. We're going to talk about HIMS and a little bit of Zeta, maybe D-Lo if we get time for it. But overall, how was your week, Knots?
Mine was good. Very good week up until yesterday. Yesterday I lost just about 5,000. And listen, I'm pretty vocal. I just say how it is. Today I made back just about half of that. But overall, it was a great week. It was a great month of July. And I started August off, pretty nicely as well. So again, part of the game. But like Ronnie was saying, I'm just gonna pull here. Ronnie, can you pull up my screen in just a second here? Hold on.
Yep.
Share screen. Okay. Oops. Allow. Okay. Let me know when I'm up.
You're up.
Yeah. So like Ronnie was saying, I mean, look at the last 3 days, not considering today. This is obviously today. Look at the last 3 days. So you could see we started to see some weakness. All our gap ups. So all three of these are gap ups, by the way. Even though this is an inside candle, this is still a gap up from the previous day by over $1. All three of them very weak, especially on the Meta and Microsoft gap up yesterday. And obviously Q's gapped up very strong. We barely got like 20 to 30 cents higher than the open, and then just totally engulfed the previous 4-5 candles. And we are now under the 9 EMA. This is the pink line right here on the daily. If you look at back, you could even look at, I've seen many posts. I just know off the top of my head from trading for the past 10 years. Usually July is a decent month, as it was, and then end of July, very early August, or just about up until mid-August, we get a little dip, and it seems like we're just right on cue here. Not to say it could be over Monday, who knows, but there's very possibility that we drop another $10-12 here, hit a key level I have at 541, or even just hit this. What do we got? 50 SMA on the daily at 542, or 543 just about. So just keep everything in mind. We are down, $22 from the highs from yesterday. We're down, forgive my 4,000 lines just for the second, but we're down 1,000 points on NQ from the top. So, we do have a nice dip so far, but there's always possibility for more. So just keep in mind, size appropriately, be ready for anything, and be ready to, just gobble up shares if you're a long-term investor. They're definitely going to see some nice dips over the next few days. And I mean, if you just look through kind of this list here, look at everything red today. I mean, Amazon alone was down 9% after earnings last night. Coin was down 17% after earnings. They did not have a good earnings. So yeah, just be smart, size appropriately, and we'll kind of get into it right now.
Yeah. I mean, loved all those points. Sorry, I was doing damage control over here because the reason that you were actually in the right room. I put us in the Oscar earnings live room, so people are probably thinking, "Where's Oscar's earnings right now?" They're not here. I messed up. It's okay. That's what happens whenever you do a lot of live streams, I guess. So I fixed it though. We're good. Find the next 10x live. But yeah, what Not said right there was absolutely just on the money, guys, on the money. I mean, we need to be careful, like when we're at all-time highs like that, and we could see it coming. The I will say, it wasn't a perfect like
Yeah.
alley-oop, right? Because I was sitting there saying, "Oh yeah, here comes the pullback," and then Meta and Microsoft just absolutely exploded in after hours. But who here thought that was normal? I mean, these are multi-trillion dollar companies moving 8, 10, 12% in after hours? Are you kidding me? In what world is that healthy? I have never seen those companies move like that. I can see an Nvidia back in the day when it was a trillion or two, but man, absolutely crazy. Just to piggyback off what you were saying, if we pull up my chart, um, and this is what I've been posting in SteadyVest community, me and Knott's joint community, and I've also been posting in my High Five community. If you want to join either of those, we'll get the links. They're on our X, or we'll get them on YouTube as well. But basically, the 2 hour, the daily, and the weekly here tell you a lot. The Williams percentage range is my favorite indicator. It's a momentum indicator. It tells you where the markets are going essentially before it happens. These little boxes that I draw, I call them the Williams consolidation boxes. And what the Williams consolidation box really is just like a temporary period where as long as you stay within that box, you'll continue in that direction. So obviously, most people know with technicals, the higher time frames you go, the more accurate they are. So as we could see, we actually broke out here of the box, and then Meta and Microsoft earnings happened. We shot back up, and then we absolutely plummeted today. Now we're in the 2 hour Williams consolidation box. The daily was in the Williams consolidation box, broke out of that. And now the weekly, this is where things are getting very, very scary. Scary if you're heavily invested right now and don't have a lot of dry powder around or cash around. Because this weekly right here, it's breaking out of that bullish Williams consolidation box. It's making a bearish cross of the 21 EMA. And because of that, as you've seen in the past, this typically leads us to a big drawdown from the green barrier down to the red barrier, right? You see it time and time again. This may be snapback, but then you get down there. So this more than likely, I'm not saying it's a guarantee or anything, but more than likely, we will see a move down to the green barrier. As with the Williams percentage range, a train in motion stays in motion. So when the pendulum swings, just like in stocks, like we'll get into UNH or Oscar here in a minute, valuations and stuff. When the pendulum swings, it's going to swing from very bullish to very bearish. It'll swing back and forth. So right now, sentiment's been very bullish, right? But now it's swinging from the red barrier down to the green barrier, getting to the bullish side or bearish side of things. So it as you can see, it swings back and forth. That's momentum. It goes both ways. It just depends on what's happening. And guess what? Little inside baseball here. It doesn't even matter what the news is. That could be a little bit of a catalyst, but typically stocks and the markets are going to move the way that the hedge funds and the big boys and the way they're going to move. If it's time for a pullback, it's going to be a pullback. And guess what? News will follow the stock price or the index's price, not the other way around. So like when Oscar's going from 20 some down to 13, what's going to happen? Well, every analyst and their mother are going to come out and say, "Oh yeah, we knew this $12 rating, $13 rating, blah blah blah." Right? And so that's what you have here. Obviously there's stuff with Trump and nukes and different stuff, right? But at the end of the day, like we all knew some sort of pullback was going to happen. We all felt it coming. Like we've gone 40 some percent since April?
A lot.
A lot.
That's the best way to put it. Yeah.
Look, you've made 4 years. You've made 4 years of the average of the S&P 500 in a couple months. You got to realize, guys, that's not normal. But all right, I think we'll shift gears here away from the markets. We've had our little fun there. But I do with that weekly. Now that we've closed that weekly, I will say I do believe and see us having a 5 to 10% pullback correction right here. And I think a lot of people and a lot of gamblers are going to get really hurt by it. If you're following me or not, you've kind of been preparing a little bit. You've been trimming. We've been talking about trimming, taking some gains off the table, because whenever you start looking around and start seeing that everything is getting real expensive and everything, it's like, what am I going to buy right now? And when you have to really search to buy things, or you're looking at safety stocks like I've been doing with United Health Group and the whole health sector, then yeah, it might be time for a pullback, right? I mean, Meta and Amazon and all those are great, but they're still a little expensive here. Yeah, Mark, I fixed that though, the link thing. But yeah, what do you want to talk about first, Knots? You think Oscar or Hims or UNH?
You know what? Let's actually shoot our thoughts over to Hims because they actually got a lawsuit today. Wasn't the one that everyone was thinking, but they got a lawsuit today, and that brought.
What are they doing in after hours? Wow, they're not even down.
No, it was this morning.
Oh, is this morning? Okay.
Yeah, hold on. Let me read it for you. So Hims, it was regarding. Hold on 1 second. Let me see. All right. Hims and Hers Health faces securities class actions after Novo Nordisk cancels partnership over deceptive marketing of Wegovy. They weren't sent a lawsuit by Novo Nordisk. It was just a firm giving them a lawsuit because they thought they were doing like securities fraud, basically. Like they sent out news that was fake, is basically what's going on.
Gotcha. So it's the same thing that Oscar's going through right now. They're still in that securities fraud investigation. And guys, a little bit, and actually, if you missed my video, I think I posted it 2 days ago. I posted my Hims video and I posted my thoughts on Hims. And I was actually saying that I'm not a buyer of Hims right now. And that was whenever we were at, 60 or whatever dollars. I'm not a buyer right now. The time to be buying was in 50s, 40s, 30s, 20s back in 20 some back in April. That was the time to be buying, not here whenever you're running into, triple resistance up top with all-time highs. But I was talking about that. I was talking about how you literally have anytime a company starts, getting their name dragged through the mud, or they get a big like drawdown on their stock price, what happens? You get lawyers that get a whiff like sharks in the water, and they just pounce, man. They pounce. They attack. And then, you start seeing those things on TradingView. Like, did you lose money on Hims? Did you lose money on Oscar? Did you lose money on United Health Group? Okay, reach out to us and we'll give you $2 if we win this case or settle outside of court. It's the same thing over and over and over again. Somebody that hasn't been playing the game for a while, yeah, it might seem a little scary. SEC investigation or lawsuit, I get it might seem a little scary, but once you've been playing this game for a little bit, you realize like, okay, I would say the United Health Group stuff is definitely worse because that's like whole DOJ and government looking into them and everything like that. Yeah, it's definitely worse, but at the same time, it's being priced in. Mm-hmm. Yeah, Hims has been holding up very well. Sorry about my dogs barking upstairs. It must be a mailman.
Can't even hear it.
Oh, okay, sweet. There we go. Yeah, I think Hims. I mean, we're running that resistance again. Now we're going to get a market pullback. Hims is very volatile. I think you're going to get another buying opportunity here probably. We have earnings Monday. Yep,
Monday after the close.
On Hims, 15 cents expected, 551.67 revenue expected. I'm expecting a double beat and a raise. I'm expecting user growth to continue to explode to the upside. But we are running into all-time highs and markets getting red, markets getting, you know what I mean? So who knows?
Did you know that Hims has beat, I think, every single earnings, if I'm almost correct? I'm pretty sure. By revenue, I should say. Revenue.
Oh, yeah, revenue. Yeah, because I saw
beat every single revenue earnings, sales earnings.
Yeah, they play the game really well. Under promise, over deliver. And that's what Oscar's doing, I believe, as well. under promising over deliver. How do you not think Oscar's playing the under promise over deliver game whenever they're gonna do $1 billion more in revenue like out of
Yeah.
nowhere for in the second quarter? You find that out? Not even the first quarter. Not even guidance for, like, come on, what are we doing here? But yeah, UNH discussed D-Lo. Also, can't believe it's this cheap. Yep. Thanks for doing this. Of course, Adrian. So Hims, I mean, I really don't have much to say about Hims. I think they're gonna double beat. I just don't know, they've pulled back a little bit. I just don't know with the markets, right? Because when markets get really going to the downside and 5-10% pullback, that weighs heavy on Hims. And let's be honest, the earnings reactions, I posted this. The earnings reactions have not been good. Besides, Meta and Microsoft, and those were just like kind of cuckoo for Cocoa Puffs earnings reactions after hours.
Yeah.
And Microsoft has given back a little bit of that, and then so is Meta, only like 3 or 4% out of 12, but you know what I'm saying. So I don't know. You know what's a really weak sector right now is actually semis. Semis with ARM, they reported some not so great earnings, and
yeah, I saw that.
some other semis didn't report the greatest of earnings. And I actually bought into that ONTO company I was talking to you about, that the long investor posted about, and I looked into it. It looks very undervalued. I got in, but it then dumped, like 7-8%, because they compete with ASML and AMAT and those companies because of the whole. And now you have fuel in the fire. So here's the thing people don't understand, and try to like kind of go all over the place here, but there's a lot to talk about. There's a lot to talk about today and this week. What am I buying right now? I'm not buying the tops of Hood, Robinhood, and Hims at these prices, and I'm not buying Carvana at all time. Like, I'm not chasing those companies. A lot of those growth companies were dirt cheap in April. That was the time to be buying them. Right now, the time to be buying the stocks to be buying are these just beaten down healthcare names, really more so health insurance names. United Health Group, Centene, Oscar, like they're just beaten down to a pulp. And I get they're not sexy, but like you just have to realize like the fundamentals are completely there. And actually, I just made a United Health Group it was a 6-minute breakdown because I talk a lot. 6-minute breakdown. I'm gonna drop that as soon as we get off this live stream today. So be on the lookout for that over on my YouTube.
I just want to state, because you brought up a good point. I mean, like, you want to be buying names or sectors when they are not doing well. I mean, as an investor, that your whole point is to actually buy things when they're red. And I'm not saying buying shit companies. Like, there's a difference between buying shit companies and actually buying companies that like are providing financial growth, are actually growing, are pioneers like UNH. Like, it's pretty hard for UNH to actually dissolve as a company at this exact moment. Like, there would be too many ripple effects. Like, I'm just saying hypotheticals, but I'm just saying, like, those are the companies you want to be buying when they are red.
$25 billion in free cash flow.
Yeah. I mean, that's crazy. People were.
And they're $215 billion market cap right now.
Yeah. What is it? Top 3 in the Dow? They are?
Yeah, top 3 in the Dow. And they are the number one health insurance. Grabbing all that sector.
Yeah.
Like number 1 on the pedestal in that entire health insurance sector. And like they have other businesses too, and those are all growing. And I went over all of this in the 6-minute breakdown that I'll post after this video. But yeah, so $22.14 of EPS too.
Yeah, what I think is funny is, and this is where I was kind of getting to, and I mean, you see people now talking about it or saying like, "Oh wow, I wish I bought it." People called AMD the automatic money destroyer, something like that. Something like that, last year, because in all honesty, it was god awful. 55 went 63% down. But I posted this thing like late last year or extremely early this year. Like, I mean, it had to be like first week of January. AMD has a very historical history of going 55 to 60% down after reaching, new all-time highs.
So
And
does
then it does it
Nvidia.
again. And
So
then
does
it does it
Nvidia.
again.
Yep.
And since what it hit like 72, 73 in low of April, it's over 110% in 3 months.
Yep.
No one's saying it's a money destroyer now. I actually saw someone say it's a automatic money dispenser the other day, which is funny.
I think I said something like that too.
Yeah.
Once it started running.
Like, you see how quick people change up when things actually are going green, but they'll always shit on it and say it's going to zero when it's going down.
Yep. Exactly.
So,
and I made that post yesterday. It was like United Health Group. Let Berkshire Hathaway and Warren Buffett be buying UNH at these. Let the 13Fs come out in like a week or two.
Yeah.
Let UNH be on there. See how fast people change that tune. They're gonna be like,
they'll be jumping on it.
Oh my god, it'll be up like 20% in a day. Like, oh my god, Warren Buffett, like, okay, it's got his stamp of approval. Yeah. Now I care about the fun. Now the fundamentals make sense. Like, what?
What?
Like, but to put the AMD in perspective, right? Right now, you can agree with these, or you can disagree. I don't really care.
Yeah.
But I'll just tell you, you had a 30% margin of safety in April at $78.58. At the lows, you had a 30% margin of safety. So now, based on just their free cash flow, now you have a negative 53% margin of safety. So when should you have been buying AMD? Should you have been buying AMD at 78 at the lows, even 80, 90, or even just anything under 100? You're getting a great deal.
Mm-hmm.
Or buy it now at 171. Small little pullback. Come on. Even EPS, 155 is fair value. It's above that. That's with a 40 PE. I like the company. They're number 2 though to Nvidia, and it's like timing is everything, guys. Timing is everything. That's why I made another post today, and it was just like, look, like, be careful who you follow. Like, I mean, there's a lot of people out there. Like, I think for real, we're gonna have a 5 to 10% pullback. But there's a lot of people out there today, and like, not to talk other people's game, they could do whatever they want, but like, just pumping the crap out of like meme coins, or I'm just like, ETA or Ethereum's about to pull back hard. I said that yesterday too. Just like, and I sold out all my Ethereum this week, like for 40-some% gain. It's just like, I could be wrong, of course. But like, at the end of the day, would you rather be wrong and then take your gains off the table, or wrong and then lose all your gains? I know what I'd rather have. Profit's profit. Gains are gains. Like, we all see what happened in April. Everybody was like, bulled up after Trump got elected, and then bam, everybody got smacked down, including myself. Did not take enough gains. Learned my lesson though. So
I have a quick question, Ronnie.
Yeah.
So, again, all hypotheticals, but if you were looking at UNH, because I know you brought it up, where do you think the possibility, and again, I know it's all hypotheticals, I know it's just a question, where do you think the possible bottom could truly be on a name like this?
I love that you bring it
up.
I've
had so many people ask me that, so, why not we just throw it out here and see what we come up with.
Yeah.
So, I would say,
love that you brought it up, because
I would say the first thing I see is the monthly 200 SMA is 225, and we are $12 away.
Yeah, actually, let me put those SMAs on here. Let me see. No, Hunter. The Oscar earnings are not today; they're next week. I goofed up. And I put us in the wrong channel. So that's my bad. But let me spit something at all of you right here. If you're listening, you're about to get some, like, I don't even care if you don't even know what trading view or a chart or an RSI or a moving at. I don't even care if you know what any of that is. And I said the same thing in my UNH video. You don't need to know. All you need to know is this. You see this squiggly line down here, right here?
Make it really simple.
RSI. This tells you when things are overbought and oversold. This is like if you went out and tried buying a PS5 and you couldn't get one, and then you know that scumbag down the street bought 20 of them and he's selling them on eBay for $10,000, you can buy way up here, or you could buy now whenever it's actually maybe, a little bit closer to what it should be, MSRP. That is like, or like super undervalued because it's a little dinged up or something, right? So that's RSI, either really overbought, meaning like it's getting extended, or oversold, meaning it's getting just absolutely beaten down. It's like super cheap.
Yeah.
The last time we were at a 30.36, or just this low, this green line down here is the lowest we've ever been. We've never been lower than that. The last time we were down this low, can you guess when?
2008.
2008. You know what happened in 2008?
I know.
The Great Housing Crash.
I wasn't really aware at the time, but I know.
Yeah. I was in high school at the time, but
I was not in high school.
Yeah, the Great Housing Crash of 2008. That big bubble that they talk about when they talk about in the history books. You have the dot-com bubble, you have the Great Housing Crash, you have COVID crash. Yeah, 2008. 2008 was the last time we were this beaten up. And when we were there, right? And this is the monthly chart. Every single one of these candles is 1 month. 1 month. 1 month. We went down 77.5%. Peak to trough on UNH. Guess what? Right now we're at 62%. Do I think we get down to 77%? I don't, but we could. I mean, the sentiment's so bad and people are just giving up on this name. 77%. To get this name down, Great Housing Crash levels would be 140. I mean, if this thing gets down to 140, they better literally just be like, revenues are dead, everything's dead, nothing. Like, what are we even talking about? So, where do I truly believe? First and foremost, this is just a guess. I made another post today. I fully expect to double my money in United Health Group in the next 1 to 3 years. If you just in your brain thought, well, that's not that much money, that's not that good. That's 33.3% return on your money every year for 3 years. If we hit 3 years, you realize that, right? So what are we even talking about right now? Because the average return in the stock market is literally 9 to 10%, 8 to 9% average per year. So my guess would be, that 200-day moving average, or you see this little box I have drawn down here, that's your COVID low. So 173.20 is the COVID low. And back then we were doing 60 billion, 61 billion rounded up, 61 billion a quarter in revenue. And now we're doing we've doubled that. And you're telling me that we're almost at the same price and we've doubled revenue? We've doubled revenue. 69 billion to 100 and almost 12 billion. What are we talking about here? I just like it. It blows my mind. I love it. I'm buying more and more and more. But yeah, 200-day moving average at 210.20. COVID lows will be 175. I mean, if it breaks through that, then I don't know. They better have found real fraud or something with them.
Yeah.
If they didn't, then even if they did, it's priced in, right? Like they were gonna find fraud or something like that. So it's crazy, man. It's absolutely bonkers. But yeah, I think UNH is a buy all day. I've been buying it. I've been buying a lot of this health insurance sector. Honestly, it's dirt cheap. It is
dirt cheap. Everything is dirt cheap. I mean, every time I look for a new long term over the past month, healthcare.
Yeah.
Healthcare. Like I'm, like I'm concerned to buy more, but then you look, they're all beaten down. And that's when again, if you're buying a good company and you have to do your due diligence, you have to see, are they growing in revenue? Are they growing in free cash flow? Is their EPS growing? And again, we can go to Oscar's fact right now. Yes, they did pull back on EPS guidance, but they already still stated that they're going to be growing years ahead. Their revenue actually increased this year by 800 million. They added on the revenue guidance, took away on the EPS guidance due to things that were going on government wise. So again, just because they pulled that back does not mean it's a bad investment now. At least for me personally. Listen, you look at it how you want to look at it personally. We are all different people. We are all different investors. But there is an opportunity here. Look at the team, look at the execution, look at the growth. And I mean, think of the possibility that of what I posted about the other day, what Ronnie posted about the other day, what you've seen online is the Democrats actually yesterday said they sent in a bill for ACA to be extended. There is many Republicans, I'm not saying all of them, there's many Republicans that actually want it because it looks good on the midterms. And obviously, just think of government shit. They both want to look good on midterms because obviously they both want to be elected. And if one of them says no, I'm saying like if the Republicans say no or the Democrats say no, that looks bad on them. Because this is people's lives, this is people's money that is going to be exponentially raised on those insurance premiums. And you do not want to be the bad guy in that realm.
No.
So kind of to get back where I was going, the possibility of them actually extending ACA is very high, in my opinion. And again, it's not going to be on the first bill, which they said they sent in yesterday. That's from Chuck Schumer specifically, which they said they sent yesterday. Who knows if they actually did or what happened. That bill is definitely not going to be accepted. They're going to have to negotiate. It's going to take a couple weeks, maybe a month or two. But I just can't see how there is no way ACA does not get extended. And then that's an instant boost for one, all of healthcare, and two, obviously Oscar, because people talk about ACA with it 24/7.
Yeah. And right now, guys, $9.99 a month, lifetime, first 100 people. We haven't hit it yet. If you want in on that, I just commented it. That's the link to the Watt page. That's me and Knots for $9.99 a month forever. Like literally talking about covered calls, cash secured puts. I posted some leaps in there today. I posted all my buys today. Knots have been posting buys. You're getting all of it. I mean, it's crazy. Our individual discords and trading communities, investing, they're not that cheap. So not to sell you up, you guys do you, but I mean, after 100 people, it's never going to be $10 a month again, ever. But yeah, it's crazy. And that sparked my brain into thinking, okay, I'm going to keep loading up in the health insurance sector. Where do I think we will get the next dip buying opportunity? Well, if you've been paying attention to earnings reactions, and if you've been reading the news, you know that the fears of invasion of Taiwan are at sky-high levels again. Seems like it was something that wasn't really a concern anymore. But now we're starting to get that concern again. Mm-hmm. You also have companies like ARM and other semiconductors, companies that haven't been reporting that great of earnings, and they've been dumping hard. So not saying they're definitely not there yet. That sector is very expensive right now. I'm just saying that could be the next sector that I really look my eyes over and I'm like, okay. Like I think like an ASML, I think they're very cheap right now after their recent earnings. They've had a big drawdown. I think they're very cheap. And there's some other names in the sector. I think Taiwan Semiconductors, even at all-time highs, are pretty cheap relative. You're getting a good deal, in my opinion. But I'm going to hold off for a little bit because if this China stuff continues with Taiwan, then that they're gonna just dump again. Why? Because
you're not wrong. TSM
is literally they produce all those chips in Taiwan. So if that happens, they'll have a huge dump, back down to 200, and I'd love to be buying there. But yeah, awesome, Seth. Good to have you in the community, man. Yeah, it's a no-brainer. If I was in your guys' position, I would do it because you're getting both of us for $5 each. It's crazy. But who else? Oscar. Oscar reports next week. We can talk about Oscar.
My favorite Oscar again. Oscar Zeta hymns. Oscar Zeta hymns. Rivian. I'll
Yeah.
report next week. Those are my favorites.
Yeah, it's gonna be exciting. That's gonna be exciting.
Yeah.
I know I'm going live, which was this live stream group, so I have to make a new one. But I know I'm going live next week. Knots might join me if he can.
Yep.
We'll see. But yeah, if we look at the weekly chart on Oscar, like, you just need to realize that very simple here. Right in here is when Mark Bertolini took over this company. And now they're up here. And they're just in this range, guys. They're just in this range. $11.25 is like the low from April. There is so much support and from $11 to $13 per share, like so much support. And your 200-day moving average is right there at 1053.
Yeah.
They've already come out and said that their earnings, they're going to have a losing year of EPS. So net income, they're going to be a net loser this year. But then on the counteractive of that, they said they're going to do 30 to 32% revenue growth year over year.
Yeah.
So it's like, okay, sacrifice 1 year of EPS being EPS positive when we know they're already. It's not even like SG&A cost or getting out of control. They've gone from 19% SG&A percentage cost down to like 17% now.
And
so go ahead.
Sorry, I was just going to say, I think he even stated that they're going to be increasing their kind of like prices next year.
Yeah.
Don't get me. Don't take me.
He said that they're going to increase their prices next year. They're going to increase their premiums because what they had priced in for this year was a lower MLR, medical loss ratio. They had a lower medical loss ratio priced in. The average, the mean is 80. Anything below 80, actually, though, what you need to know is that the government has this rule. Essentially, anything below 80 cannot like be used as profit, cannot be used as like, them taking in more money. It would have to be redistributed back out to members, to customers. So like if they ended up doing a 79% medical loss ratio and they had that 1% difference, then they would have to kick that premium back out to customers. Like, oh, here you go. Merry Christmas. Yeah, Merry Christmas. Here you go. Have this back because the government doesn't allow us to take that much.
Yeah.
But 80% is the median. Now let's talk about that. Oscar did 86 to 87%. That's what their medical loss ratio grew to this year. And that was like kind of like out of left field. It was like, oh, well, didn't expect that. And that's why they're having negative EPS this year, because they were expecting more in the ballpark of 80 to 84 and they kind of spiked. So that's why they're going to have to pay more now and then not have that net income. But guess what? Companies like Centene and United Health Group, they actually did like 87 to 88% medical loss, or like 88 to 89% medical loss ratio. So somehow Oscar's even doing better than them with the medical loss ratio. And they grew $1 billion, while Centene and these other health insurance companies, even though they're really cheap and they're great deals as well, I believe, they didn't come out and say, yeah, actually we're going to do another $1 billion in revenue out of nowhere.
Yeah.
I mean, they're not doing 30% revenue growth either. So look, yeah, you sacrifice the EPS this year, but then I think the EPS next year is just going to be absolutely explosive because now they're raising prices. Let's say that the medical loss ratio goes from 86 to 87% down to 84 or 85%, or God forbid it goes down to 80%, the median. Oh my goodness.
Yeah.
They can make all that money. That means they charged like they were going to have to pay 86, 87% medical loss ratio, and it was only 80. We'd be looking at 1,000% EPS growth. Just insane because they're negative this year. So like, this is what people don't understand. And like you were talking about, Republicans have two choices. They either fall on the grenade and do whatever, head honcho, whoever that is, says to do, vote no, on a bill, or don't meet in the middle. Don't meet in the middle with Democrats, right, on a bill to approve ACA subsidies.
Yeah.
And just fight the Democrats and say, no, we control the House and Senate. This isn't happening. They can do that, but you have to realize it's a double-edged sword. One, a lot of them are going to lose their seat. So it's not even like one biggest thing. Overall, Republicans, they don't want to lose control of the House and Senate. They don't want to lose all those seats. And I'm not trying to get super political here, but they don't want to lose that control that they have right now. So that's one. If they don't do this, a lot of people are going to get ticked off because everybody's premiums are going up. Everybody's premiums, everybody's paying more for health insurance. I don't care if it's ACA subsidies, ACA whatever, Medicaid, it's all going up. It's all going up. And that means more money out of your pocket. And guess what? That means higher inflation. We don't want higher inflation. We just beat inflation. So if we get higher inflation, that's bad, right? So we don't want higher inflation. We don't want the 66% of people that use the ACA subsidies are Republican voters. We don't want them mad at us because then they're going to vote against us and we're going to lose our seat. So one, they don't want to lose control of the House and Senate. Two, on an individual level, you don't want to lose your job. You don't want to lose your seat at the House or the Senate, because if you lose it, it's going to be really hard to get it back.
Yeah.
So those are two big reasons why maybe they don't approve the first bill, which I actually don't believe they will. I think Democrats are going to.
I don't.
It's the art of the deal. It's any business person understands that your first offer or your first, what you bring to the table should always be more than what you actually want, because then it leaves this room for negotiating, and then you still get what you want right here. Okay, you come in here, you still look for what you want to get here. Okay. Yeah. So that's what the Democrats are doing right now. They're lobbying this up. It's going to get shot down, and then Oscar might drop a little bit. I doubt it, though. I mean, it's holding so strong between 11 and 13, and it's not me and you buying. I promise you I can't buy enough. I promise you I cannot move this stock 0.0001%. I really can't. I really can't. I could buy 10,000 shares, and I still wouldn't move it. Like,
are you sure?
Who's buying there? Well, guess what? In a week or two, we're going to see who's been buying on the 13Fs. We're going to see who's been buying. And then that probably pops the stock higher.
Yeah.
I mean, it's just at ground level, guys. I mean, it's and the reason I told Chris this on X, he posted like, yeah, between that $11 and $13 level, it's great support. It's a great buying area. And I was like, that's because it's literally priced for bankruptcy. It's literally priced as in, if you liquidated the whole company and you gave the money back to shareholders, you would get almost their market cap. You would be able to they would give you a check and say, okay, we liquidated all our employees, all of our assets, all of our investments, everything. Here's our cash, right? We're going to take in the rest of our accounts receivable, our free cash flow. Boom. Here you go, investors. Here's your cut. They're literally what? $2.98 billion company. I thought they were still in the threes. They're below 3 now, brother. Like, what are we doing? What are we doing? They're $2.98 billion. They just did $1 billion in free cash flow last year, over $1 billion, and they have over $1 billion on the balance sheet. Okay, I get a lot of that's getting spent out for premiums, but if they price in premiums now, if they price in premiums now and then take that money in the beginning of the year, then they're still going to have that money. And then if they don't get, here's the thing. If they take in that premium, right, and they have that money and they paid out the other premium, that was for last year, and they still have majority of that money. It's still just so silly to me. So yeah, people will say, I'll buy it at 8, I'll buy it at 9, I'll buy it at 10. Okay. Once there's a whiff of a deal coming out, once there's a whiff of this on some big hedge funds 13F, you're not going to get to buy at 13, 14. You're going to have to buy at 16, 18, 20, 22, because it's going to move before you can even touch it. Even on Robinhood after hours market, you're not even going to be able to touch it. We're going to be sleeping. Heads are going to be on the pillow, and you're going to wake up and be like, oh, wow, Oscar's at $20. It's going to be the same thing with United Health Group. The thing's going to move so fast, and you're going to be like, I'll wait for a pullback. I'll wait for a pullback. Oh wait, nope, gone. See you later. Look at AMD.
Yeah,
it happens
that's a perfect
every single
example.
time, guys. When people start going in my comments and say, I'll buy at X price, and it's like way lower than where we're at, I'm like, we're getting very close to the bottom. When people start saying I'm gonna buy it like an absurd level, we're getting very close to the bottom. Very close. Because people always want cheaper, and they just say that to, I don't know. I don't even know. I don't even think they would buy there. I think they just say it to say it.
I do it.
Right. So I just went on a rant. Dang, man. Dang. Zeta, I mean, we'll see how they report next week for their earnings. I'll let you talk about Zeta. I'm gonna take a breather.
Yeah. So the one thing I would say about Zeta is they basically hold on. There's something I saw about Zeta the other day. Oh, let me dive in. Give me a second.
They signed Tom Brady.
No, yeah, wait. Didn't they have some Tom Brady thing though? Actually, last week.
They signed Tom Brady to a like a advertisement deal or something.
Okay.
Which is huge because Tom Brady's a household name, so that only benefits
100%. Hold on.
Only benefits them. So
there was something I saw on Zeta that I wanted to bring to this, and I should have bookmarked it. Let me see if I did. Hold on.
There's too much stuff.
Dude, I have so many bookmarks of all my things.
Yeah, I just do it and then I forget about it. It's like, yeah, no, that didn't happen.
Well, one thing is, RBC. This isn't what I wanted, but I just saw this. RBC maintained a buy rating at $25.
Dang. Okay. I think institutions have been buying them up a lot more. I think I was on Robinhood. It showed like institutions been buying this thing up like crazy. So I think they know about. Yeah, I think they know something for earnings. I mean, we're just sticking around here in this like $14 to $16 area. We cannot break through the 16 to 1650 area. We cannot break through it.
Yeah, I don't know what I had for Zeta.
This trend line up is still holding, and we still broke out of this downtrend. So I mean, would I be surprised if Zeta just absolutely launched after earnings? No. But at the same time, could we get Zeta lower? Maybe. But yeah, it's
so things I say about Zeta is, first off, again, growing company. They aren't EPS positive yet, correct?
Nope.
Yeah, no. So they report EPS positive, but they're not actually EPS positive. And I can't remember the difference. That's actually what I sent you the other day, Ronnie.
Yeah. Yeah, I have it right here.
What is it?
So if we look at the yearly, yeah, what's that? This?
What was the reason for that? Yeah, like how do they report positive, but they're not positive yet? I just can't brain.
Oh, their stock-based compensation.
Yes, there you go. Yes, that's what I brought up to you. Yes,
their stock-based compensation's been out of control, but I guess they're getting it under control now.
Yes.
But I mean, people say that. So okay, if we look at the yearly stock-based compensation as a percent of revenue, look at this. From 2021 to 2024, it's significantly gone down. On a quarterly basis, you see it as well, significantly gone down. It's ticked up a little bit here this last quarter, and I think that's what people are bugging out about. But again, as a percentage of revenue, you want to see this keep going down, and that's what we're seeing.
Yeah.
The revenue is absolutely increasing.
Oh, 100%. Right?
They've gone from like 429 billion up to 974 billion. Oh my goodness. 428 million up to, they've doubled that in the last 3 years. And they're expected to continue to have, 20 to 30% revenue growth rates. and this is what I want to see. When with the net income, I want to see, that deep spike, and then I want to see it gradually climbing. And then I want to obviously see that. And if we look at analyst estimates here, what are we going to see? We're going to see that we've hit a peak, we're climbing down, and now we're finally about to get EPS positive this year in the next few years to go. So this is what you want to see. You want to see this revenue continue to increase. And then lastly, you want to see that free cash flow. Look at that, just continuously increasing.
Yeah.
I mean, what more do you want? You have revenue continuing to increase. You have net income about to go positive. You have cash flows continuing to increase. The stock-based compensation based off the revenue percentage is continuously going down. And this company is doing 20 to 30% revenue growth rate. And they're just crazy undervalued. Like, it's not like if we're looking at this company and then we're like, oh yeah, I mean, they have a 100 PE. Try a 25 forward PE for a company growing 20 to 30% revenue growth. I mean, what are we talking about here?
Yeah.
Price of sales under 3. I mean, it's crazy cheap. It's crazy cheap. Crazy cheap.
Their
look at
free
it on
cash
my
flow.
if we look at it on my high five snapshot, man, I mean, look at this thing. 47% margin of safety.
Look at their free cash flow too. I was
Yeah.
just about to bring that up. Yeah.
Exactly. It's just gonna explode here. Like revenue and in this conservative revenues, conservative, mid to high teens. And they're actually projecting and expect 20% plus. So on the conservative side of things, guys, it should be $29 today. It's 15. So it should be a double from where it is today. And then if you take it off of EPS is supposed to be 65 cents this year, right? 69 cents, whatever. That puts them at $17 fair value on EPS. And that's what that's what a 25p. That should be 30 for how big they're growing. So that puts them at 22. So yeah, it's like, again, another great gem, another great company that, you're looking here and you're gonna beat the markets big time. You're gonna beat the markets big time with something like this.
Yeah, I agree. Their free cash flow grew 70% year over year from this last quarter. Revenue 36% year over year. Net income 45% year over year. EBITDA 121% year over year. So again, you're looking at a company that is growing.
Yeah, it's crazy. It's crazy. Yeah, you just sit there again. It's just another fear, uncertainty, and doubt has taken over this company along with the other companies that we're in because somebody's suing them.
Yep.
Well, if you ever watch Suits, you realize that a lot of people get sued a lot, and if you hire the right lawyer, they can get you out of anything. So the more money you got, unless it's like a way bigger person suing you, usually you're gonna be able to get your way out of it, or you settle out of court, and then you're good. So.
I do have to hop off here in just a minute. I have another call.
Yeah.
But yeah, I mean, next week is a major week. Again, earnings across the board. So definitely going to be a fun one. I listen, I love being an investor during earnings time. That's me personally. I don't know why, but
I like listening to the earnings calls and just picking up those gems. So many people are so lazy that they don't listen to the earnings calls. And it's just like, I don't know. Like, you can read a 10K and a 10Q and you can look at the pretty little presentation that they put together, but it's those questions at the end of an earnings call that is going to tell you so much about the leadership, where the company's going, what their vision is. You can't get that by reading, and you definitely can't get that by just scrolling through the million posts on X, right? So
not wrong.
I don't get all this conviction just I don't even know. Like, I don't just get this conviction out of nowhere.
Yeah.
Like, even my high five snapshot, if it tells me a company's undervalued, it's not just an automatic buy. I still need to believe in the leadership and the business and where they're going, what they're doing, their growth rates, everything,
Yeah.
So. But cool, guys. We'll wrap it up here. D-Lo, just real quick, that's still a buy in my opinion as well. It's so undervalued. It's not a US company, obviously, but at the end of the day, I think their free cash flow gets back on track. It might keep going lower here, guys. It's 10:01 today. The 52-week low is $6. It could definitely go lower as the market goes lower because it's finance. So just overall sentiment can go lower, but I still like it for the long term. If you think out past a week or a month or a couple months, you're gonna do great in investing. If you're all about here and now and want to do that game, well, me and Knots both have our own communities for trading as well. Come on in there and we can do the day by day, week by week, or month by month stuff. But don't get them confused. Don't mix them up. That's where you get really messed up. You shouldn't buy into UNH today to make 100% tomorrow. You should buy into UNH to double your money in the next 1 to 3 years in an investment portfolio.
Yeah.
All right, guys. Love you all. Great having you here. Like, subscribe, follow, share this, do all the good stuff. Join SteadyVest, almost at 100 members, $9.99 for life. It'll never be like that ever again. So if you want to join, now's your chance. I don't even know how many we're at, but I think we're getting close to filling up.
Yeah.
So you can join that. Links in the comments here. And yeah, hope you guys have a great weekend. And to drop that UNH video here in a minute. And then also tomorrow I'm doing technical analysis weekly. So if you want to learn more about charting and trading and looking for great stock setups, I'll be doing that tomorrow live as well. So all the good stuff. Have a great weekend, guys. Catch you in the next one. See ya.
Have a good one.